Hello. 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 Hello.
Hello, good afternoon.
Good afternoon. How are you?
I'm good, and how are you?
Not bad, not bad.
Okay.
Not bad.
Just having some problems, some bad connections with the internet.
Okay.
Yes. Okay. Let's get started.
Yeah.
Let's see what we can discuss for today. Okay.
I would say yes for tomorrow, but I can't because tomorrow will be a tough day for me. Like
Ah,
today, yeah, that's why I didn't agree for tomorrow because today I didn't work. I had an emergency. I had to go out, and I just came in. And tomorrow I will have a lot to on my plate then. And Friday I will not work.
okay. All right.
Yeah, yeah.
We'll see how it's going to be. Maybe if tomorrow is not going to work, then what's left can be finished off on Friday, because just remaining with some few things. I think once we are done with our supply and demand today, I believe there will just be remaining with one part, the last part, which is liquidity and also to do with entries, and then we'll be done. The rest will be now, up to you to put to practice and see how you can put this work information to work.
Okay.
Yeah. All right. So let's get started. We'll see how we can run through and see what we're going to cover for tonight, for today. All right. Last time we had a meeting, we were looking at the supply and demand and how you can identify the supply and demand and how important it is that you combine both market structure and supply and demand to find the best areas of interest where you can get into a trade and also exit out of a trade. So we said that when the market is in an uptrend, all the supplies are going to become weak and all the demands are going to become strong. And when the market is in a downtrend, supply is strong and demand is weak. And we also looked at two categories of supply and demand. We looked at reversal pattern, which consists of the drop base rally and the rally drop base. And the rally base drop. So these were the two types of patterns, which are the reversal patterns, the drop base rally, and the rally base drop. We also looked at the continuation, which are the rally base rally for a bullish continuation, and also the drop base drop for a bearish continuation. And we said that sometimes the market may not necessarily pull back to the extreme, because we want the market to pull back to the extreme where we see price comes back to the origin of the move, which led to the break of structure. And like I was saying, that sometimes it's not always that the market will come back to this area of interest right here. And I said that this demand zone, which is the origin of the move that led to the break of structure, is the most, it's the strongest zone of all. And right here you can just enter using you can enter using what we call buy stops. You can just use a buy stop right here to just get into this trade. Why? Because we don't expect the market to break or begin to trade below this supply, this demand. Why? Because according to our market structure, we know that this area is protected, meaning that it's a strong area. Why? Because it led to the break of this high, creating that higher high, meaning that the demand that is going to be created here is going to be a strong demand that must be protected. So we don't expect this to happen, although this may happen in the market, but at this area, we don't expect this to happen at least, all right? Even if it happens, but we don't usually expect it to happen because that's the strongest area where we expect price to come and touch. And then from there, we expect another impulsive move to go and break structure, leading to the creation of a higher high. Now, I said that price will not always come back to these areas of interest. Why? Because of what we now call continuation patterns, where the market, if it is pushing to the upside, it pushes up, then it pulls back, and then it begins to put up continuation kind of setups like that. And price may come and react off of this continuation pattern, whichever zone that the market may choose to react off of. It may decide on any zone, all right? And we don't know which area, we don't know which zone the market is going to choose, because for all we know, we have multiple zones in one range. We have multiple zones. So we have this, which is the extreme zone. And then we also have a rally-based rally, which is going to be this one right here. So you can mark all these zones, and all of these zones are valid, but we don't know which one is going to hold the price. We don't know which one is going to be used for a pullback or for a reversal. We don't know which one. So the only thing we can do is we have to look for lower time frame confirmation, which is a change of character. And the change of character is what is going to help us know that the zone is going to hold. All right. But among the rules that we looked at, we said that the zone must lead to the break of structure, meaning that a zone that is formed outside the break of structure, meaning that the zone that is formed outside this break right here, after price has already broken this high, and after price breaks this high, if price then begins to form another zone, which is a continuation, this zone is going to be of lower probability, except if price maybe it's reacting from an odd zone which the market had not reacted from. That's when we may start considering maybe taking a trade right here, but should also give us some lower time frame confirmations before we can get into a trade. But when it comes to looking at which zones are going to be respected and which zone will hold the market or will hold the price, all of these zones are valid. So price can reverse from here, price can reverse from here, and price can reverse from here, and it can also reverse from here. But again, you don't have to take a loss here and also take a loss here in order to come and take a win here. All right, so this is where now we go for lower time frame confirmation, like the change of character that we discussed, and then from there, then we look for an entry using the lower time frame. And again, we'll look at entries using the lower time frame entries, even as we begin looking at this same topic of supply and demand, and also as we bring in the aspect of liquidity. All right, so that's how we are going to look at supply and demand. Now, while we are on this same topic of supply and demand, let me just, I don't know, in our last session, did I ever give you, let's see, did I ever give you some rules of how to validate the supply and demand zone?
Not remember if you did.
I did?
No, I'm not sure. I'm not sure you did.
Okay. All right. So, okay. We'll look at them then. Okay. So one thing that is important about supply and demand, I'll put something here to say odd odd, and I think this one I did mention it. Odd and mitigated zones are used as what? Reaction points to fuel a pullback. To fuel a pullback. Mostly, right? So odd and mitigated zones are used as what? Reaction point to fuel a pullback. And what that means is that if price supply market structure is more important than supply and demand, right? Market structure is more important than supply and demand. I'm sure I did mention that. So let's say we have been going into the uptrend and price has been pushing to the upside. Let's say here price mitigated that zone, and here we bounced off maybe somewhere in, maybe let's say there was a continuation right here and price, okay, let me just draw it nicely because I don't want to use assumptions. Okay, so we have a push. What's going on? Okay, so we have a push right here. Then we have a pullback. And then price then pushes to the upside, we break structure. Then we pull back. Again, price pushes, we break structure. Then we pull back. Let's say price is just using these continuations and break structure right here. Price then, again, you can say right here, we came here. And then now price is right here. So what we are having now is market structure of an uptrend. And here we break structure. You can say break of structure right there. And also here we break structure. And we can say breaks of structure. I
said that you have a trend now because you have two highs and two lows.
Yeah, exactly. So we have a trend now because we have two highs and two lows. So break structure right there. And what happens? Again, we break structure right there. So we are in an uptrend, and then if we bring in our supply and demand, we can say we have a zone down here. All right, this is extreme zone, and it was not mitigated, so we'll leave it like that. Again, we have this zone right here, price put back into this zone. So this one was mitigated, all right, because price came and used this one and pushed to the upside. Again, after that happened, it's going to leave another zone down here, which also price never came back to, and it was unmitigated. And then we can see price maybe use this continuation zone right here, which is the rally based rally, and this one was mitigated. Again, right here, we can see that price then came back to this zone. We can say the extreme right here was now mitigated nicely, meaning that this time around, this one was mitigated. And as we can see, we are creating higher highs and higher lows, meaning that all the lower highs, according to the rule of the market structure, an uptrend, we said market should break the highs and respect the lows. All right, so we can see that all the lows are strong because price comes back to them, but they are not violated nor broken. So we can see price is respecting these lows, all right? It's not breaking them. However, when we look at our demand zone, we can see that the demand on this area, price never came back to this demand right here, all right? So this demand was left, which is the origin, and price used a continuation pattern. So instead of price coming back to this extreme zone, it used this decisional zone or a mid-range zone. All right, it used that zone, then it pushed up to the upside. All right, so what will happen then is even here on this leg, we're still going to identify this demand zone. All right, and we're also going to identify two zones right here. Now, what will happen is that the moment the market changes structure, right? If one zone fails, the assumption is that even the next zone will do the same. So let's say here price, this zone fails, then we expect to buy from there, but the zone now finally fails. So the mistake that many traders now begin to make is quite all right if you only have one zone that has been taken out. According to liquidity, once we get into liquidity, we'll begin to say that could be just a sweep of liquidity and a reversal, all right? But then we don't really know whether it's a sweep of liquidity or it's a break of structure. So, but according to structure, so let me not get ahead of myself and start talking about liquidity. So according to structure and supply and demand, so once we break this higher low, which created the higher high, all right, and take out this demand. So this demand now has been violated. It's weak, meaning that even the demands which were not mitigated. So this demand, you don't have now to start looking for buying opportunities here, unless maybe otherwise. So meaning that price, yes, it can give you a buying opportunity, which can lead to the break of structure, because sometimes structure, like I said, it's not always perfect. So you can find that price is going to react from this area of interest and then pushes all the way to the upside, taking out even this high right here and breaking structure to the upside. But again, what may happen is that you have to think in probabilities. And what does that mean is that price can push to the upside, then reverse and continues going to the downside. That's what I mean. So you have to look at the probability of, the possibility of this also happening, where this demand just facilitate a pullback, where after price reacts on this demand, it doesn't necessarily lead to the break of structure, but only to bring about that pullback. So let's say it brought about the pullback, and then that's all about this zone, because it's an odd zone now. All right, so since it's an odd zone now, what happens? The market then comes to this other one, and also this one also can just do the same. At the very least, it's just to facilitate a pullback. So price will still use these odd zones that were unmitigated, but if the market structure changes, you don't have to start looking at those zones as zones where you can start looking for some big moves. All right, so what you can do,
now we have a downtrend, right?
Yeah, so what you can have at best is just a reaction. So those will be areas where price will be looking for some areas where it can pause, all right, before it continues, because the market doesn't just move in a straight line, all right? So it will go up, put down, go up, pull back, go up, pull back, and stuff like that. So these zones which were not mitigated, at the very least, are going to be used as what? They're going to be used as reaction point, where the market now can start just finding areas where market can just pull back to go and create maybe a lower high in order for the market to continue going to the downside. All right, is it clear?
Yeah.
Okay, great. So as we are looking at taking trades, okay, so now we'll be adding to our rules of our trading rules or our trading plan. So according to the plan that we had written, all right, from the beginning of the beginning, when we began, we started having a session together. So I said that you have to have trading rules. So let's say the trading rules, right, that we looked at last time. So number one, we want to have a confirmed trend. So by confirmed trend, for a confirmed trend, we looked at two highs and two what? Two highs. Exactly. So we want two highs and two lows. So that's what we want. So the first thing that you need to do is you need to look for a confirmed trend. It doesn't matter what time frame you are trading. You are trading on, whether it could be the higher time frame, lower time frame, it doesn't matter. But the first thing that you need to look for is a confirmed trend. A confirmed trend, and a confirmed trend is made up of two highs and two lows. So two highs and two lows. So that is the first thing that you need to look out for. Then the second thing that you need to look out for is number two, you need to look out for the recent break of structure. Recent break of structure, which is the BOS. So first thing, I want to see if the trend is confirmed, two highs and two lows minimum. Then number two, recent break of structure, which is our BOS, if it is breaking to the upside or it is breaking to the downside. Then number three, price must pull back into the discount yes, discount for a buy or premium for a sell. Okay, so we want to see price pull back into the discount for a buy, premium for a sell. So we're looking at buying at discount, we are looking at selling at premium. All right. Then number 4, okay. We have now to identify what? A supply and demand zone. So identify supply, demand zone in premium or discount. So this is something that is very important, premium or discount. So you look for supply or demand in premium or discount. All right, that's number 4. Then number 5 is wait for lower time frame confirmation on the zone to validate the zone. Okay, so we wait for the lower time frame confirmation, and that lower time frame confirmation we're talking about is a change of character. So before we, I'm not going to add liquidity because liquidity is the last part, which is also going to be used to validate. So you can wait for lower time frame confirmation and also liquidity to strengthen the zone. But for now, since we have not yet done liquidity, so I'm not going to go into areas of liquidity. So we have rules. So first one, trend confirmation, recent break of structure, then a pullback into minimum or discount. And also the other one is you identify supply and demand zone in discount or premium, and then we'll wait for lower time frame confirmation on that zone. So what does that mean? So what that means is that, let's say price is in an uptrend creating higher highs and higher lows. Let's say we have 2 zones right here and price is coming. Okay, let me draw it nicely. So we have a high, then a low, a higher low, then we have these 2 zones right here. Okay, so let's assume that this is already a confirmed trend, right? Let's assume that it's already a confirmed trend. So the recent break of structure is here.
Okay.
Okay, so that's a recent. So we are assuming, we are skipping number 1, right? We are assuming that it's already a confirmed trend, meaning that it's coming from somewhere. So it's coming from somewhere, like
okay. So but if you take this this one, like only if it doesn't come from somewhere,
it's not
you
a confirmed
consider
trend.
this.
It's not a confirmed trend until we have this.
Good. Okay, good.
Okay, so that's why I told you to say we are assuming that it's coming from somewhere. That's why I said let's
understand
that it's a confirmed trend. It's coming from somewhere, but on its own, this is not a confirmed trend.
Yeah.
Okay,
I see.
so let's see. No, on its own, it's a confirmed trend because we have 1 high, 1 low, 1 high, second low, and second high. So it's a confirmed trend already. It's a confirmed trend. You get it? So 1 high, 1 low, 1 high, second low, second high. And we said we need what? 2 highs and 2 lows.
2 highs and 2 lows.
Exactly. So it's a confirmed trend already. Okay, so let's say we have this confirmed trend right here, and then now we want to take a trade. So right here, we can say we have identified our zone. All right, so this is our demand zone, our decisional. We also have this reversal zone right here. So we have 2 zones. We have this extreme zone right here. We also have this one right here. So which of these 2 will price respect? Which of the following will price respect? I don't know. Okay, but all I know is that price is more likely to respect the lower one than it is to respect the higher one. So price is more likely to respect this lower one than it is to respect that higher one. All right. Price is more likely to respect the lower one than it is to respect the higher one. All right. Now, again, I don't know. It may also respect this one and make this one to be a zone where they will choose to create their lower high, their higher low. So the first one is we have ticked the first one. It's okay. We pass. All right. Second one, we have just broken the recent break of structure. The third one is we want to see price pull back into what? Discount or premium. So since it's a buy setup, what we want to see the market do is to pull back into our discount. So you take your gun box from the high, from the low to the high, you just flap it there as the pullback begin to happen. Right. And you can see that this zone is already in our what? In our discount. All right. It's in our discount. Okay. Although we have already identified, because I've already skipped stage. I went into stage 3 to stage 4 without, I needed to follow it from 1. We confirmed that it's a trend. Number 2, recent break of structure. Number 3, we put our gun box. Before we mark our zones, we put our gun box. Then number 4, we identify. So now what I'm interested in is a zone below my 50%. All right. So it's a zone in my discounted area. So this one qualifies to be a zone. All right. Because why? It is in my discounted area, and also the extreme one, because this one is already in my discounted area. So this one automatically qualifies. All right. It automatically qualifies. So now I've identified what? 2 zone. All right, then I move on to the second one, wait for lower time frame confirmation on the zone. So what does that mean? So what that means is that on the lower time frame, obviously price was doing something like this. Obviously on the lower time frame, it was creating some form of structure, as we looked at when we looked at multiple time frame market structure. So it was doing something like this, right? And then we became bearish, so price began to create lower highs and lower lows, lower highs and lower lows, as it facilitated that pullback. So the moment price hits this zone, all right, if indeed this zone is going to hold, all right, we need to see that price gives us what? A change of character. All right, so price must give us a change of character like that. Okay, so once we see on the lower time frame, so this is the lower time frame structure as it is stated in the rules, wait for lower time frame confirmation on the zone. So the lower time frame confirmation is a change of character. So once price hits a higher time frame zone, all right, so if this zone is going to be the one that they want to use to create a higher low, all right, so they have chosen this zone to create a higher low. What are they going to do? They're going to now create a change of character right here, meaning that they want to show us that buyers have now jumped into the market, because you can see that the lower time frame downtrend or order flow has shifted. Now we have a change of character. Okay, so now that we have a change of character, now we can, there are 2 things that you're going to do right here, all right, because sometimes price may you are going now to focus on this leg from down here to up there. You're going now to focus on this leg, all right, and identify a zone right there. So even here, you can do the same thing, all right. So you can do your gun box, all right. But now the difference here is that you don't have to wait for 2 highs and 2 lows, although you can do it. But why are we omitting the aspect of waiting for 2 highs and 2 lows? Because the higher time frame structure is already uptrend, and this was just a pullback, and this is a zone. So already a zone has shown us bullish momentum coming into the market, right, by a shift in trend on the lower time frame. So what we can do is that wait for price just to pull back into maybe this new zone that we're going to identify on the lower time frame, and now wait for the market to come back right there, and we can now buy the market. All right, targeting the higher time frame structure. Any questions on this one?
No, that's fine.
Okay, so that's the first thing. Then the second thing that you're going to do is sometimes the market may never come back to an extreme of that leg that you've identified. So sometimes the market, let me put back the gun box. All right, let me put back the gun box. So you have the gun box like this. Okay, even here, price can choose to do what? To reverse anywhere. So it can even choose to just reverse and go up. So you can see that here the market never came back to our buying zone. All right. So if the market never came back to our buying zone, it's okay. All right. What you need to do is that follow it up. All right. Just follow what price is doing. So we have the new break of structure now. All right. New break of structure. Again, you can get your gun box just like that and put it right here and wait for what? Wait for price now to come into your lower time frame. I mean, into the discount zone of this range now. So again, you identify your buying zone. All right. So now in this case, if price were to come back right here, all right, this is why you'll be looking for for some buying opportunities, and your target, of course, will be the higher time frame structure. All right. So
Okay.
this is how you can take entries on the lower time frame based on the higher time frame structure and based on the higher time frame what? Supply and demand. So if price now reacts on the demand zone and then it gives you a change of character, if it pulls back, like what I said, like it pulls back right here, then that would be a good entry. But if it doesn't do that, you don't have to worry. You just have to apply the same information. So what you're getting, this information can be applied on any time frame. It's not time frame biased. You can just, it's one information, apply it on different time frame. Okay, so you can follow it up and still do the same thing until you get your entry. All right, so that's how you get an entry on the lower time frame. Now, suppose the market does not give you a change of character, right? So suppose the market does not give you a change of character. So let's say price fails to break above, all right? Because what we are waiting, the only signal that we have to get here to buy this zone, because like I said, this zone is not necessary, it's not always going to hold, all right? It may or it may not hold. So the only reason for us to buy here is we need validation, and that validation is a change of character. So if price comes here, all right, respect this supply or on the lower time frame and push to the downside, it means there was no trade. That means this zone has failed to work. So you wait for another zone to hold. So let's say price comes here now, and this is where now it gives you the change of character. So meaning that if you are patient enough following your rules, then you are not going to risk an entry here and risk your capital, because you know that, okay, for my rules, I'm only waiting for what? For change of character. So meaning that you're not going to enter here and have your trade hit stop loss. All right, that would be so unwise of you to do if you became too fast and you rush to get into a trade right there, because what may happen is that price may not necessarily do what? May not necessarily, unless if you are ready. All right, for me, sometimes I know how I push this thing. So sometimes I would take my risk percentage. Let's say if I'm risking 0.5% per trade, okay, or per day, or I'm risking 1% per day, all right, and I want to take an advantage of a trade. So I may give 0.5 here and the next 0.5 right there. So I'll split my risk into two and take the first entry 0.5, the second entry also 0.5, all right, because I know that one of these is going to hold. So I'm okay taking a loss right here, and I can still recover it on this one right here. Okay, yeah, but if you're that kind of a person who is not a conservative, I mean, who is not an aggressive trader, then you can wait for confirmation of a change of character right here. And once that happens, that's when now you can start entering your trades. But then if it doesn't happen, meaning that there's no trade, so you wait, that means this zone has failed to work. So you look for another zone, all right, which is going to give you what? A change of character. So let's say in this instance, it gives you a change of character right here. So it's a minor break of structure. And then what we have now is we have a change of character right there. Again, it's the same thing. So you get your gun box from the low of this move to the high of that move right there. And then what happens? Then you wait for price to do what? To pull back. All right. So let's say price pulls back into this area, and then you look for the demand and you take a trade targeting that high right there. So you're also increasing your risk to reward. You're also increasing, come on. You're also increasing your risk to reward. Instead of taking a trade that is going to have a very high stop loss, you are reducing your stop loss. All right. So let's say here, if the stop loss was quite big, by identifying a zone on the lower time frame, you minimize on your stop loss. Okay, so you increase on your risk to reward. Okay, so that's one of the reasons why we have to look for those refinement and those confirmations on the lower time frame. Okay, any questions? Okay, it's very clear, right?
Go ahead.
Okay. All right, so now we are going to go to the chart and look at how now we can identify our supply and demand zone and see how we can mark them, because I believe what else is remaining? Let's see what else is remaining. Okay, before we go to the charts, let me just give you the type of candlesticks and how we are going to also mark them. So these are most important rules that you need to really look out for. So we have different candlesticks. So I'm sure you've heard of a bullish engulfing. You know, this is just basic Forex 101. All right, when you start looking at candlestick patterns. So we have bullish engulfing, where we have a bullish candle engulfs a bearish candle. So let's say price was in a bullish momentum, and then it hits a zone or a level, and then what do we see? We see a price shift. So that's a bullish engulfing pattern. Then we also have another pattern which is quite important, which is called an inside bar. All right, so an inside bar is where we have a red candle and followed by a very small bullish candle, all right, for a reversal. So we are going to have something like this. Okay, so this is what we call an inside bar pattern. And why is it called an inside bar? It's also called a pregnant candle or mother and daughter. All right, so that's the name that they have decided to give them. All right, so this is just a flip side of a bullish engulfing. All right, so this one is called a mother and daughter type of a candle. So, and then you can even see price may even continue pushing to the upside, creating new highs, etc., etc. Then we also have another type of a candle, right, which is also known as the color of the candle doesn't matter. All right, but it's called a pin bar. And most cases, how a pin bar looks like is something like this. So you can have this candle, all right? So it has a wick at the top and the wick at the bottom. So that's a pin bar. The wick at the bottom is bigger than the wick at the top, meaning that it's a bullish engulfing. All right. So if the wick at the top is longer than the wick at the bottom, then it's a bearish. I mean, it's a bullish pin bar. If the wick at the top, at the bottom is longer than the wick at the top. But if the wick at the top is longer than the wick at the bottom, then it is a bearish pin bar or a hammer. All right. So sometimes it's called a hammer. And then we also have a doji. All right. I'm sure there are different types of doji. We've got the dragonfly. We've got the cross-legged doji. Then we also have the gravestone doji. So the gravestone doji is the bearish type of a dragonfly. So this one is called a dragonfly, kind of a doji. But if we flip this around like this, then it becomes a gravestone. All right, it becomes a gravestone doji. All right, so that's the way it is. Oh, that. Okay, so we also have what we call a spinning top. So something like this. Okay. Okay, so a spinning top is a type of a candle where I can say the highs, meaning the lower wick and the higher and the upper wick are almost equal. All right, so some kind of candle like this. right? So there are different types of candlesticks that you are going to that we are going to identify, but I'm just trying to give you an example of how you're going to map your zone. All right, so and how you're going to map your zone is in this way. So let me just say H4. Okay. All right, so how you're going to map your zone is like this. So for a bullish engulfing, whether it has got wicks, right? Even if it has got wicks, so let me just give you an example. Let's say it has got wicks and wicks at the top and at the bottom, like that. So you're also going to take advantage of what? You're going to include those wicks, all right, in your, as you identify, or as you map that zone. So you're going to take this candlestick, the bearish candlestick, and you're going to highlight it like this, and this is going to be your zone. All right, meaning that, what does this mean? It means sellers were in control before buyers took over. All right, so at this point where buyers took over, what that means is that buyers overpowered sellers, and this creates now a good buying zone with a lot of what? With a lot of buy orders, meaning that if price were to go, let's say price went all the way, right, and then now it begins to come back. So this is going to be the area where you can look for some buying opportunities. Okay, and it's the same way for the sell, except that if we have to draw that, we may, have to waste we may waste a lot of time. So equally here, you can do the same. Let's say if it has wicks, right, both at the bottom and at the top, so you can still also take account of the wick, right? So you're going to have a proximal line. So the one on top right here, all right, it's called proximal line. The one far, all right, from the close of a candle is called the distal line. All right, so the distal line is the one that is always at the open of the candle, right, for the bullish candle, all right, and the proximal is always at the close of the candle for the bullish line candle. But for a bearish candle, which is this one, the proximal line is always at the open of the candle, and the distal line is always at the close of the candle, right, because of the opposite of the candles and all that. Okay, so but don't have to worry so much about the proximal and the distal. It's not that much important. What is important is to understand how you can identify this zone. So for the one where you have, let's say it's an inside bar pattern, all right? So this kind of a pattern right here. So let's say you have this inside bar pattern. So how do you map the zone? So you just take you map this zone right here, all right, this bearish candle, all right, map this bearish candle like that. Okay, because mapping the whole, the bullish candle, not bearish. So because mapping the whole bearish candle is going to give you a very big, zone, right? It's going to give you a very big zone. And sometimes the market, the marketplace is funny. So sometimes what the market can do, can come here and begin to push the upside, creating more liquidity for price to come and sweep, and then use that zone, and then it goes. So this can just be inducement for price to come lower here, and yeah, the market goes to the upside. All right, so that's how you map the zone. Let me remove this one. Okay, even this one here. Okay, so now the next one is the pin bar. So there are two ways in which you can map the pin bar. All right, the first one is you can map the pin bar by just mapping the wick, all right, from here, all right, because this is where the open of the candle was. So from the open all the way to the downside, you can map that, and this becomes your zone. Or you can map the whole entire candle, right? You can map the whole entire candle. Okay, so this is how you can do it. So you can do it either this, or you can do it this. Okay, but I would prefer, if you are learning, you're doing some practices, it's better you map the whole candle. Same applies with the doji. All right, it's from the top right here, the top right here, all the way to the bottom. Okay, so this is going to be a zone. Okay, so this is a doji. And after a doji is formed, and mind you, what we're looking at is price must continue pushing to the upside. That's the whole idea. All right, that's the whole idea. Price must continue pushing to the upside. All right, so we want to see something like this here. Even here, we want to see something like this, where price continues pushing to the upside. That's what we want to see. Okay, so if it left a doji, all right, this doji then is going to become our zone. And also here, you can pick it from the top to the bottom and you map, that becomes your zone. That becomes a zone like that. So that's how we map the zone, and that's how we identify our zone, whether it's for supply or whether it's for demand. The difference is the same. Any question?
No question for now.
Okay, so then let me remove all these drawings and let us go and identify the zone. So now, sometimes before I proceed, sometimes what you're going to find is you're going to find a situation where you have a candle like this, whether bullish or bearish, it doesn't matter. Let's say it's bullish in this case. Okay, so so let's do this. This is a wick. All right, so it had a wick at the bottom and a wick at the top. And we have another candle that opens right here, and then it goes up. Right, it also has a wick like that. Okay, so in most cases, what you see, because this wick, the higher wick and the lower wick, on the lower time frame, if you go on the lower time frame, you may find a zone, all right, something like this. Okay, let me do this. You may find a zone right here. This is what we call fractals of supply and demand. So this is what we call supply and demand fractals. So you may find something like that. Okay, so if the market was coming down, you may find on the lower time frame, there was something like this. Okay, so price did that and then pushed to the upside, and it's a zone that you're going to identify. All right, it's a zone that you're going to identify. So may sometimes begin to identify some weird things. So these wicks, the upper wick and the lower wick like this, becomes your zone. So provided it is found in the right environment and provided it is found in the right place. So you're going to mark it like this, and that becomes your zone, where you may look for lower time frame confirmation as price comes back there in order to do what? To take the market to the upside. Okay. So now let's get to the charts and let us see what we can, how we can put it to work. Because again, it's important to practice. I hope you are practicing with this knowledge that I'm providing with you, because if you don't put it to work, in the end, it's useless. Yeah. So we're going to look at maybe the lower time frame. We can even start from the weekly, because this is, it's not, like I said, it's not time frame specific. It applies to every time frame. Right, so where are we going? Okay, we are here. So it applies to every time frame. So one thing that we need to understand is we have to understand market structure. Market structure first is the most important aspect, like I said, of trading, right? So here on weekly, we had a break of structure right here. So we broke structure to the upside. So we're going to say maybe weekly break of structure. All right, weekly break of structure. And we're going to now pick this. You can see right here, we have this candle. This was the last bearish candle before the market bought. All right, so this is a weekly zone that price never came back to. All right, so price never came back for this zone. So we're just going to leave it right there as our weekly zone until price comes back to it. Okay, so price may never sometimes, because this is Nasdaq, and Nasdaq works differently from currency pairs. Currency pairs, they move up and down, but Nasdaq is more of a buyer's market. It doesn't stay long, it doesn't stay down for long. All right, it has to recover. You can see we had this push to the downside, and now what is it doing? It's trying to recover. It's trying to go back to the high, which is this one, and probably may even start seeing some new highs being created on Nasdaq. That's the goodness with this market. It doesn't go down for long. It doesn't stay down for long. All right. Again, we have a break of structure right here. Now, if you can observe, I'm just mapping. If we have to follow our gun box, like I said, let me apply all the rules. Just mapping structure. All right. Nothing to do with the entries. All right. Again, here we're just mapping structure and supply and demand. All right. Like I said, everything has to be done slowly, right? I don't want to rush you into giving so much information to a point where you fail to assimilate it, and again, you start having problems again. All right, so we can see that here we had this range here from down here, this candlestick to up there. All right, so if I want to map this zone, all right, how am I going to map it? So I'm going to pick this doji candle right here is the one that I'm going to pick. All right, and again, you can see price never came back to that, so just going to leave it like that as a weekly. So you can see price pushed, then we had a pullback, then we had a push to the upside. All right, even here, even this one right here is a zone that we can think of. All right, because we are dealing with one week, and all these zones are below our 50%. All right, so I'm just picking zones that are 50%, and if price doesn't come back to those zones, then that means there is no trade. All right, there's no need for us to start mapping all these zones. Sometimes I can map them, but on weekly, these are the only zones that we have. All right, so right here now we have this pullback. All right, so in the next range, we have a pullback from that high to this low. So again, we take our gun box and we put it from that high to that low, and we identify our supply and demand zone. So we have this last bearish candle right here, right, and we draw it like that, and you can see price came, it never broke below, right? It just wicked but never closed, because for me the close of a candle is very, very, very much important. All right, so I'm more interested in seeing a candle close below or above even a zone. All right, so in this situation right here, what we only have is, you can see price wicked. So for me, a wick, I do not consider a wick as a break of structure, but as just a grab of liquidity. So again, liquidity, we'll look at it later, but we grabbed liquidity here before price started pushing to the upside. So we grabbed liquidity below the zone. Why? Because there was another area where price will needed to come and mitigate, etc., etc. But just following the zones, this is where price came to, and what happened. Use this zone now. First move, we pushed to the upside, then they even came deeper, all right, grabbed even more, all right, and now started pushing to the upside. So you can say that it's this zone, all right, where they were, putting orders, okay, where they wanted to come to before they pushed the market to the downside. And of course, no one knew that this was the zone that they wanted. But of course, when we go maybe on the lower time frame, we'd find that this is the one that gives us a confirmation. At first, we had a confirmation here. All right, you can see this push gave us a confirmation. Why? Because we had a low, a lower high, a lower low, a lower high, a lower low, a high high. So we had a change of character, of course, but that change of character failed. all right, and price still did even go further. So sometimes such will happen on the market, all right, because the market is not a perfect place, or it's not a perfect environment. Okay, so again, we can see right here, we have this candle. I don't really like it so much, but we have this pullback down here before we start seeing a push to the upside. And for me, I'm more interested in just picking this wick to that high, to that low right there. And we can see when we bring it right here on a 1 week, you can see that price, of course, tried to do it, tried to get some orders right here, tried to play around this area until it couldn't, move any further to the upside. And what this could only look like, it's a 1 week candle, but if you go on a daily, all right, that was about 1,000 points. That was something big. That's about 1,000 points. So 1,000 points times one standard lot size it's about $1,000 in that one move alone. If you just opened one position where 1 pip or 1 point is equal to $1. So it would give you 1,000 US dollars. All right. Now, price pushes to the upside all the way, and you can see price then began to push.
That's the one I want you to explain me and help me to identify how to select when I put my gun books and said this is what I want to risk. And
no, this
is what I will have.
You don't use the gun box to risk for risk.
No, I understand.
Risking, okay, yeah, let me explain it. Risking, you use this, all right? This is for targets and stop loss. That's the one that we use. Okay. This one is, this one is different from this. This one, it doesn't have any this one, it just helps you to identify where you need to come.
Okay. I thought you used the same.
No, it's different. It's different.
Oh, okay.
Yeah, you can see this one is long position. This one is the one that we use for risk to reward. It's this one.
The first time I asked you this question, I thought that you used the same one with the okay, good. Okay.
Yeah. So
I think you'll get there soon, right?
Yeah.
Okay, no problem.
So the risk to reward is this one. So the gun box is just to show you where the demand and supply. It doesn't do anything. Yeah. Okay.
Okay, good.
Okay, so we pull back, and you can see that even here, if we were looking for some nice buying opportunities, quite all right, we would have identified some, because even here, I really don't want to pick this one, but we can even pick, you can see this week down here, it was part of this candle. And obviously on the lower time frame, it will become even more easy to find a zone. But this is a daily time frame, the weekly time frame. So we just stick to following the rules. So our rules is that price should get here before we should push to the upside. But price failed. In short, it came to our premiums, it came to our equilibrium zone, and what happened? Price shoot to the upside. So again, no trade, meaning that the only thing that we have are unmitigated zones. All right. Now again, we come here, and what do we have? We have our weekly. Again, we take our gun box right here, and then we put it right there. Okay. So in this situation right here, we have a very big zone, very big zone. So we have all this zone right here, all right, from right there all the way to down here, because this is the last sell candle before the buy that went all the way to break structure. So you can even map it like this, because that's the range that we have. And you can see, even if I even take it all the way to the left, price still came back to this area and tried to use it up for some pushes. But we can see that price then put back. All right, let me remove this. So price put back into this zone, and price began to buy. So if you're taking a trade and refined trade, it's okay. Good to take that trade. There isn't any problem. But you can even see that This was a very huge zone. Price came, grabbed some orders, pushed to the upside. They still came to the same zone, right, and tried to push to the upside. But then this failed to create a new higher high. Why? Because the market had become a bearish trend. So all the demand zone in a bullish trend are not going to, in a bearish trend are not going to work. All right. So again, here we have this. So again, we need to identify our zone. So in this case, we will go for this candlestick right here, right? And again, it's okay. Let me just do this. It's okay to go for which one? It's okay to go for this last bearish candlestick, like this one right here. And you can do something like this. And of course, you can see how price even came back to this area, all right, on weekly. So you can see this was a very huge demand zone. Let me remove this, all right? It was a very, very huge demand zone, and price came into it, then pushed to the upside. All right, again, what do we have here? Okay, now beginning to feel sleepy. All right, so again, let me take this back on, and we can still identify some more zones. So we have this zone right here. Take it to the left, to the right, and of course, price came and reacted off of that area. All right, so yeah, those are the zones that we are more interested in. So you can see how price came into this zone, reacted into it, also came and picked some orders right there, but price still failed to create a new higher high. And then here also have a break of structure right here. So from that high, we break structure, and after we break structure, the next thing is we take our gun box, and then we map it like that. And then you can see right here, now we have a doji. So you can see, pick that doji. And yeah, so in this case, this demand failed to work. Okay, this demand failed to work. Do we have another one? What we have here is it's not a good zone though, but maybe on the lower time frame it can even be a good zone. But we have this kind, all right, where price pushed, put back, tried to push up. So we have this range right here, but I'm not going to mark it because it's not clear. So I'm not going to confuse you again to start mapping things that may not be clear for you or to you. Okay, so I'm not going to map this one. So the only zone we have is this one, and price came and broke it. So now, like I said, once price breaks the demand, so right here, all right, once price breaks the demand, all right, we had a break of structure weekly. So once price breaks the demand, okay, ready, what begins to happen now is that all these demand zone will become reaction points. And this is what I was explaining. You can see how price comes here, gives a reaction, breaks it, comes here, gives a reaction, takes it out, comes here, gives a reaction, takes it out, comes here, gives a reaction. You can see all that. So they're just becoming what? Reaction points. Of course, I know weekly, these could end up being huge trades, you know, huge trades, because this is Nasdaq and we're looking at it on the weekly time frame. So even if it's a reaction, it's a huge trade. These are all huge trades on daily. But if you're trading, let's say you're a weekly trader, that means these will just become reaction, meaning that if you're looking for a buy, it will just push up. If you put your stop loss, let's say below here, and they'll take you out. Again, you say, I'm buying here, and then you buy because it's a demand, right? You buy, give you some profit, they take you out, all right? And then you say, okay, what is going on? I don't understand my strategy anymore because, you know, price, I keep on buying and my stop loss keeps on being hit. You try to get in here, gives you a buy, take you out. Buy here, gives you a nice buy, finally takes you out. And you can see how many losses you have to endure before one can work. So that's called gambling. And this is why You don't have to take all those odd zones after price changes structure. So instead, you have to change your bias the moment we break structure and you start looking at these supply zones right here. So now you can see this is the supply zone that price never came back to. And again, as price is going towards that area, it has already changed what? It has already changed the trend. So we are already in an uptrend. So let's see. So we break structure, then we pull back again. We create this lower low right here. I hope it is resonating with what we have been looking at on market structure. So we have this pin bar, okay, and this is where price has been, and this is where we have been taking some trades, you know, some sales and some buys. It's because price came back to this weekly supply. Now, this is a long-term supply, so I don't expect this supply to do what? I do not expect this supply to take the market all the way to the downside. I don't. Okay, at the very least, what I expect this supply to do is maybe provide just a minor reaction and push to the upside. And already it is failing. All right, you can see how many weeks we've been here. All right, from the time we reached this area, this is 1 week, second week. All right, so we've been stuck on this supply for 2 weeks now. You get it? And this is the week that has begun, which began with a holiday. All right, so we are here now. So don't know, because already this candlestick, this weekly candlestick, although today it's not Friday, but you can see that it's already a doji, meaning that starting next week, we don't know what price will do, whether to push to the upside or will drop to the downside. So there isn't so much momentum in this week. You can see this is our weekly candle. Not so much momentum. Why? Because we have reached at this odd weekly supply zone. So I don't expect this weekly supply zone to bring about a major move. Why? Because we are already bullish in a weekly. We have broken structure to the upside. So what I can expect this week to do is maybe just a reaction into these areas before we can start pushing to the upside. Does that make sense?
Yeah.
All right. So again, we have, can call this one, I'll call this one weekly. All right. So, okay. So we have a lower high, lower low, lower high, lower low. Then we have a higher high like that. We have a higher high. Now that we have a higher high, all right, so what is happening on our weekly, all right? So right here, pardon me, sorry, I didn't do what I was supposed to do. So after we break structure, we need to still do what? Put our gun box. Yeah, I didn't do that. My apologies. Okay, so let's see here. Do we have any zones? Yeah, we have, but the most important one that we can see is this one here. So you can see we have this. So we had a drop, then a rally, a drop, a base. So this doji is a base, then we have a drop. So this is going to become our zone. And you can see how price put back into that zone on weekly, and you can even look for some lower time frame entries. So weekly, we had that one, and price, of course, put into that area weekly, and then we dropped to the downside. So now we had this from high to this low right here. All right, and what is happening right here, you can see that quite all right. We had a drop, pull back. So we had this zone right here in our premium, because we are only interested in premium. So premium, and this one never did much. You can see it only caused a reaction right here, only caused a reaction right there. So you can see price came, reacted. How many points was this reaction? Right, so it was about 300 points, not bad. Okay, it was just a minor reaction, all right, on this one here, this week. So price pushed, then we put back, then we pushed again to the downside. And again, you can see that here we had this week, which was the supply zone, this candlestick right here, wicked into that area and grabbed some orders and then pushed to the downside. So again, right here, there wasn't anything except that price reacted off of this imbalance. And again, imbalance, would look at it when we start looking at liquidity, because imbalance is part of liquidity. So let's say price failed to mitigate any of the zones and created that lower high, then we dropped to the downside. All right, dropped to the downside. Then after we dropped to the downside, the next range that we're going to look at is this one right here, from that high to this low down here. And we're going to have, of course, so this is an example of what I was saying, the inside bar. So you can see this candlestick, it was bullish, and then we have this bearish candle. So you can just pick on this bearish candlestick like that, and draw it, you pull it to the right until we see where price came and reacted from. So the other one, the other zone that we have is this big zone right here, from up to that high. All right, and we pull it to the right. Okay, so these are the only zones that we have in our premium. All right, so premium, we're following the rules. Confirmed trend, break of structure, pull back into the premium or discount, and then identifying our zone, and then we look for lower time frame confirmations. But for now, we're not looking for any lower time frame confirmation. We're just identifying these demand and supply zones. So this is how the market is going to look like after you've mapped out your zones. It's going to look like something like this. Right, so again, as you can see right here, once we turn bullish, all right, so we turned bullish here, all right, we turned bullish right here. So this is where a bullish market started, and we know that now all these supplies here, they're not going to hold, all right, so you don't have to look for selling opportunities here. Okay, on weekly, if you're trading a weekly time frame, you don't also have to look for selling opportunities here, because they are just reaction point. Price is just reacting, as you can see, given those minor reactions.
Can you please give me a few seconds? Can you give me a few seconds?
All right, no problem.
Okay. I mean, for me, sorry? I can't hear you, I'm sorry. Okay, not for me. I'm on the side, not for me. Okay, thank you. Hello?
Hello?
Yeah, sorry. The guy said that I have a barbecue for you. I didn't order a barbecue.
Okay.
Sorry, man.
So
Yeah, we can post it now.
Oh, we can proceed? Okay.
Yeah.
All right. So like I was saying, all these odd supply zones are only going to be used by what? It's going to only be used, they're only going to be used as pullbacks. So here is a supply which was just used as a reaction. Here's another supply which is just being used as a reaction here, and also a reaction right there. So even this one, because price never got deep into this supply, so probably if price comes back to that area, all right, it's going just to be used as one for a pullback. So let's say if price comes back to this one, all right, because it wasn't mitigated fully, so it's going to just be used as a reaction point, all right? So meaning that on weekly, we are bullish until we see the weekly structure fails. But for now, we are bullish. So these are the zones that we have, meaning that even here, when price gets to this weekly, it may be just for a short move to the downside and then we push to the upside. Why? Because weekly we are bullish. Now let's go to a daily. So the daily is going to help us to more like it's going to help us to okay, so the daily is going to help us to do what? To refine the weekly, all right? Because the daily also has its own structure, all right? The daily also has its own structure. So when we go to a daily, we will identify the market structure of the daily and also identify some supply and demand zones. So before we go to a daily time frame, let's go back to weekly. And again, on the weekly, since we have broken structure to the upside, we are going to get our gun box from this low right here all the way to the up, although we don't know whether this is where the pullback is going to begin from, but we can get that one and identify our weekly zones. So this is the last bearish candle that led to the break of structure to the upside. Okay, so that is our extreme. Then we can look at, we had a push, we had a pullback. This is more like a rally, a base, and a rally. All right, so again, we have this one right here. These are our weekly zones that are valid in our discounted zones. All right, so that's okay. So after that, the next thing that we want to see is maybe price. If price were to pull back from here on weekly, we may want to buy from here, or we may want to buy from here. These are the only two zones that would look for some buying opportunities. All right, so now we go to our daily. All right, so daily again, we start the process again. All right, so now in this time, I'm not going to go all the way down here because it's not so much important. So we just look at this move to the downside, then a push to the upside. Okay, because of time. All right, and also because of, you know, this whole price action here is not so much important. So on daily, what we have now, let's look at the daily time frame. So we still have the weekly zones. We don't have to remove them. All right. So we have a break of structure to the upside like that. A break of structure to the upside. So we have a daily break of structure. Then we have also a daily break of structure to the downside like that. Okay. And from there, we can get our gun box and put it, flap it right there. Okay, so this was the whole move. So you can see that we only had one move, can say one zone which was quite relevant here. It was just this extreme zone. And this is exactly where the market came back to. And what do we see there? Price then began to do what? Began to sell off from there. All right, so this one, it was mitigated. So we had a mitigation right there. And then the next thing that we see is a break of structure to the downside, right from that low all the way until we see a closure of the candle below. So this is where we have the closure of the candle below. And after we have the closure of the candle below, then what happens? We have to find our lower low. So our lower low is all the way down here. All right. This is where we have our lower low. So from here, we get our gun box. Now we are in a confirmed trend. All right. So because we have one high, one low, second high, second low. So now let's see how price is going to pull back. So again, we are going to identify our zones, right? So the first zone that we need to have is the extreme one, which is this one right here. I've just picked that candlestick, which is what? Which is a spinning top, more of a spinning top right here. But if you want, you can even pick all this up to here, right? So that the last buy before the break to the downside. It's okay, right? As long as you can pick 2 or 3, one or two candles, it's okay, all right? But not 3. 3 is too many. So again, you can see that on daily, price never came back to this area. So this area on daily has remained unmitigated. And if price comes back to it, we don't expect the market to do what? To give us some huge buying, huge sales once price comes here, because it's odd. It's an odd zone that price never respected. All right, so price never came back to it. So we had a minor pullback, still failed to come back to this zone. Let's hope it's not becoming too complex for you.
No, I'm following.
Okay. All right. So, okay, great. So the other zone that we have in our premium zone is this one right here. So we have another one right here. So you can see we have another one right here. So we can take it to the left. It's also our daily zone. And then also we have quite many zones. We also have another one which is right here, which is also our daily zone. And then we can also push it to the right. Then we have, like I said, these 2 weeks right here. All right, these 2 weeks. Okay. Let me show you so that you may see them. Okay. These 2 weeks right here. Okay, these two. You see them? So
yeah,
from down here to up there. So that's a zone. That's a zone. And this is where price put back into. So this one got mitigated. So price at least came back to one of the zones, which is this one here. But these others, we'll still have to keep them there because we don't know what price may do. They may be used as, just areas for pullback, etc., or reaction points, but not necessarily that we can look for some serious trades out of them. All right, on daily, but on the lower time frame, yeah, could be some reaction point with some good points that we can get out of there. So from there, we have from that high, we have this low down here. So again, we get our gun box. We have a recent break of structure from that high to this low down here. And again, what do we identify? We identify our demand. So the first one that we identify is the extreme one. And exactly this is where price came back to, right? So that was our daily zone. And then from there, we also had this one right here. So this one was another zone that price, but price failed to hold. It was, like I said, most of these zones, they're just going to give at least 50% entry. It's not always that this is going to hold, but you can count on this one, which is the extreme, which is formed at the lower high, right? You can always count on it. Okay, so we can see that this one failed, but the other one held. And what happened from that one? Then we had a huge drop, right? We had a huge drop. So again, we broke structure to the downside right here. On M on daily, and again we need to identify our range. All right, so we need to identify our what do you call this? Okay, we need to identify our gun box. So can pick our gun box from that high, maybe all the way to this low. Though I don't really like it. So I'm going to pick it all the way to this low down here, because this one is a clear. This is where we had a clear pullback. All right, this pullback maybe on 4 hours, yeah, but on daily it's not so much clear. So it's from that high all the way to this low down here. Okay, so now let's identify, we have this demand right here. This demand right here. This supply right there. So we have this supply. Then again, we can see we have this one right here. It's another supply zone that we can think of. And price, of course, never came back to any of these zones. And we also have this one here. It's also another supply zone. And price never came back to that area. And what else? What else? This one, though, I don't really like it, but it's not that perfect. So I'm not going to pick it. All right. But we can see we had a push. We had these 2 weeks right here. All right. Not so much good, but you might be surprised what impact these weeks can cause in the market if price decides to use them. All right. So let me show you. All right. So these weeks, all right, at least they're quite significant. But if you have seen, I'm not picking on any weeks, because if I was to pick on any weeks, then, you know, it will really, really, really be so messed up. All right. I'll just pick on these if they appear to be in our premium, right? Not just any weeks, but these ones you can see they appeared to be in our premium zone. And that's the reason why I decided to pick on them. All right. And moreover, okay, when we start looking at liquidity, there's the resting liquidity above them. That's why price decided to hold here. All right. So when you bring in the concept of liquidity, you will observe that here we have resting liquidity. So we have resting liquidity right there, which is where. Yeah, but we have resting liquidity. Oops, I can't see my time for liquidity. Oh, okay. So we have resting liquidity above there, and that's why this zone seems to hold nicely here. All right. And also there was an imbalance in between. So so many things that may cause a zone to hold. All right. Sometimes it may look so useless, but you know, never know. This is why we are looking always for lower time frame confirmation, because you never know how that zone may hold. So price then push back into that area. You can see how it put back into that area on daily. Then what happened? We pushed to the downside. So when we look at the daily, so we, in fact, we never put back on the original leg. We never put back on the original leg, because this was a pullback, but it never got to our premium zone, right? Never got to our premium zone. But what happened? We also have to look for something in this leg to see if we are going to have some nice zones. So we only have this leg right here, and you can see it really caused some nice reaction, but it was not a good reaction. And then even here we have these wicks, right? These wicks, and though they were not used that much, you can see price here came almost close to these wicks. Maybe on lower time frame you still find some confirmation right here, but price came close to these wicks and pushed to the downside. But all in all, we can say that they were never used up. So except causing a minor reaction in the market, which was this reaction here, right? So they were not used. And what happened? Price then comes to the higher, the extreme one. We see a reaction for 3 days, 1, 2, 3. Price tries like going to the downside. Then what happened? The market fails to push to the downside until we see a break of structure. So this break of structure now brings about a weekly pullback, which then started happening when price started going to the upside. All right. So from here, you can say we remove this and we change our bias as well. So we start looking for maybe some buying opportunities, waiting for price to maybe give us a pullback, which of course never happened. But of course, we had plenty of zones that were not mitigated. We had this zone right here in our discounted price. All right, that was a demand zone. And we also had, you can see this huge candle right here. Though this candle is so huge. So what we're going to do is that we're going to just pick this bullish candle down here, which is more of an inside bar, right? More of an inside bar pattern, which is this one. So you can see a big bearish candle, then this candle, and then price continues pushing to the upside, right? So what happens then? Price never put back. So we had that small pullback, but it never came here. It never came here. It never even came on this area here. And what happened? Price then pushed all the way to the upside. And again, what we're going to have is we're going to have a break of structure right there. And after we have a break of structure, right here, it's a clear. We don't need to even put a gun box because the range is too small. So already we see demand fail. So once this demand fails, all right, all the demand zone are going to be just used as reaction points. That's the thing. That's the key and that's the secret. So again, from here, we shift our bias. Again, we start from that high all the way to this low, and we can identify our demand. So from here, we have that demand, or if we want, we can use the doji, which is right here. We have our doji here. Then we have this demand zone. All right, this demand zone, then we can pull it to the right. And of course, we'll see how it's going to react and how price is going to use it. The other one is this one right here. Also, we can pull it to the right and see how price is going to react off of that area. And then also, what else? I think nothing much. So we can remove this one here, and we have a break of structure here on daily. All right. And then after we have this break of structure, what follows, we have to identify our demand zone. So again, this demand zone right here is the most extreme one. So, and again, like I said, every demand zone, every supply zone, once price changes the trend, they become more of just reaction points. So all the way from the down to here, this was our daily structure. And of course, we are going to identify the zones that are in our premium. So you have this here. And of course, you can see how they caused price reaction. All right. Are you following? Are we together?
Yeah. Mm-hmm.
All right.
Yes.
Okay. It's making sense?
Yeah.
Okay, great. So again, we can see price put back, but never came into this demand zone, meaning that if price shifts its trend and becomes bullish, then they're only going to become or use as reaction points. So again, right here, just going to be a little bit fast here. So that, okay, so again, you can see from that top to this bottom right here, can see price. We never had any zone, right? The only zone that we had was this extreme zone right here, right? Was this extreme zone, and price came back to that area. And what happened? It stored around that area, all right? Tried to push to the downside. So would have been looking for some nice selling opportunities, more especially that we trade on the lower time frame, like 1 hour, daily, M15. Nice selling opportunities down there, right up there. All right. And then what happens? We break structure to the upside. We come into this demand zone. So this demand zone is going to give us what? Reaction, because it was one of those demand zones that was not mitigated. So we expect a reaction, a push to the upside. Again, price comes to this. Why am I using demand? Supply, all right? Okay, so these are those odd supply zones. So once price comes to this supply zone, all right, we see a reaction, then a push to the upside. Again, it comes to this supply zone, which was not used. Price reacts, takes it out. So if you're trying to sell, let's say these supplies, all right, this supply zone, you're trying to sell, all right, that means most of your trades will hit stop loss. So let's say you're trying to sell this one, all right, and let's say to be conservative, we put the stop loss above Then we put the take profit down here. So then what will happen? Price will give you a nice sale, but takes you out. All right. You can't say, oh, okay, I'm going to sell now on this supply zone. And then again, you do the same mistake, not knowing that price has already shifted. It's now bullish. So you do the same thing. You say, I'm going to target this low. What happens? Price gives you the nice net profit. Then it takes you out. You say, oh, okay, I'm going to take another sale on this supply. This is the mistake that many take, more especially if you're trading lower time frame. It's easy to make such mistakes. Price reacts, takes you out. So until you realize that market structure is more important than supply and demand, you will be making these mistakes. All right. So here we have shifted, we are bullish. So what we'll be needing now is price to come into our discount zone. All right. So price must come into our discount zone. So again, what are we looking for in the discount zone? We can use this wick of this bullish candle and just pull it like that. All right. Remember, I told you to say you can use a wick if the candle is too big, right? You can use a wick of the candle. So like this here, I decided to use this wick, or if you want, you can take this whole candle right here. It's not a problem, right? But yeah, using a wick is just okay. All right. So again, we can see how price comes into this demand zone, then it pushes to the upside. Then what do we have here? We have a break of structure. So that's high, we break structure right here. Then after we break structure right here, the same process continues. You take your gun box from this low. Okay, from this low to that high, you identify your zones. Right, and you're identifying zones that are in your discount. You're not interested in zones that are in your premium. So again, we have a demand zone right here. We also have another extreme demand zone, which we can say, oh, this whole range right here, it's okay. We can pick it like that. So you have another demand zone like that. All right, so in this case, in this situation, you have 3 zones, because even this one this week is still part of the discounted zone. So you're going to highlight it also as part of the discounted zone. So we're going to see that these zones, price never put back. Maybe in the future, maybe in the distant future, price may come back to this demand zone, but they're just going to be used as reaction points. So now again, what happened? We pull back into this area, lower time frame confirmation, we buy. All right, we buy. So again, we break structure right here. Okay, we break structure right here. And after we break structure right here, okay, we are now in our new range. So we take our gun box from this low all the way to that high. And we identify again the same process. So this time around, we identify this as our zone, as our extreme zone. Okay, as our demand zone, extreme. And we don't know when price is going to come back to this area. The other one that we have is this one right here. Though it's not the nice one, but it's a wick. So we're going to respect it also as a demand zone. So we have that wick down there, and what happens? Price then pushes all the way to the upside, creates that high, and then a pullback. Quite all right. If you are looking on daily to take some trades, that means no trades for you. So again, we break structure. Let's say we break structure right here. All right, we break structure right here. And after we break structure right there, what happens? We then oh, it's from here now. So we take our gun box from that high to that low. And in this situation, we only have one demand zone, which is this one right here. Okay. And that was the last sell candle that led to the bullish move to the upside, and price comes on a daily. It taps that area. And what happens? Price then lifts off and goes all the way to the upside. Okay, so yeah, that's what we can look at, and that's what we can see about our demand and supply zone. So let's see if we have anything here. All right, so we can again look at this range from that high, from that low to that high. Okay, because you can see it's not a good break of structure, but price is too overbought. It's okay if you want, you can pick from this low all the way to that high. There's no problem with that. All right, there isn't any problem with that. But for the sake of identifying more zones, so you can see we have this zone right here. Oh, it's not from here. Yeah, sorry. It was supposed to be from this low. From this low right here all the way to that high. Yeah, so it's supposed to be. So we have this demand, and price, of course, has not yet come to this area. Okay, so these zones are just going to help you to know where price may pause before it continues, right? And like I said again, I'll keep on repeating, market structure is more important than supply and demand. And then the last one, which is almost, yes, this one right here. And yeah. So these are the zones that may say we're going to have in this range, and price never came back to them. So we say, obviously, price is going to come back to them later. Then again, we have that push all the way to that high. Okay, and from here, again, what do we have? It's the same process that has to repeat. Okay, so here again, we identify this as our zone, and after we identify this as our zone, the next one that we're going to identify is these 2 weeks right here, because they're in our discount zone. That's all. And price has not yet come back to this area, so we leave them like that. And then we go to the next one, which is we have a break right here. But this one is going to be more effective when we go to the lower time frame, which is the 4 hours. So from here, we have this. So you can see right here. So if we had to identify the zone, we can say we have this zone right here, all right? And again, price has not yet come back to this zone. So we don't know whether price is going to come back or not. And also we have this zone. Now price also missed this zone with an inch. And yeah, sometimes that does happen. Now, when we look to the right, to the left, we have this zone right here. All right, these are the zones that could not be mitigated, and now we're just pulling them back. And we don't expect price to give us big moves from these zones. The very least is they will just be used as reaction points. All right, so these are the zones that we have when we look to the left. So yeah, so this is where we are on our daily structure. So price has been reacting to this zone right here on daily. Right, let me remove this. So price has been reacting much on this weekly big zone, but also on this daily zone right here. So from here, we can even go to the lower time frame and we'll still be finding the same thing. So what will happen is that my weekly zone would disappear, and what I'll remain with will be my weekly zone. And from there, we can still do the same and identify those zones on 4 hours. So we can begin from somewhere here. Even down here, it's okay. You can even begin from down here. So price comes to this. So if you can see, this is how now you can confirm your entry on lower time frame. So let's say price hits the higher time frame zone, right? It's going to be a daily, not a daily break of structure, but 4 hours. So price comes to that area, breaks structure to the upside like that. All right, break structure to the upside like that. And after price breaks structure to the upside, of course, you have to use the gun box like we did because we were downtrend. So obviously we were waiting for price to come to this 4-hour supply zone. So price definitely came back to this 4-hour supply zone. So this could have been one of those trades that could have worked for you, where you're looking for some selling opportunities on 4 hours. Let's say you enter a trade right here, you sell the market, put your stop loss above. And if you are targeting this low, then let's say price never hit. But if you're targeting 1 to 5, let's say you had a nice take profit, right? So now after you hit your take profit, what happens? You observe that price then shifts impulsively and breaks structure. So now you shift your bias now, and we have a change of character now. So we have a break of structure to the downside and a change of character on a daily demand zone. So price came to this daily demand zone, all right? This daily demand zone, this one here. This is where we are having a change of character, all right? So you now get your gun box and you put it down here and you put it up there. And like I said, sometimes the market may not come here. So what you're going to do is you'll be waiting for the market maybe to come to this 4-hour zone for you to buy. If you're now buying, you are doing your analysis on 1 hour and then you're taking your trades on daily. So you may be looking for some buying opportunities. I mean, you're taking your entries on 4 hours. So you may be looking for some buying opportunities right here. But look at what the market does. It pulls back, fails to come here, then it breaks structure. There's no problem with that. You can let it slide, you can let it go, but you still need to look for another opportunity. So you come back, you see a break of structure, you say, okay, we have this break of structure, and let me get my gun box again from that high like this. So in this situation, in this time around now, you can pick on this week. So we have this 4-hour zone, where price never came back to, but we have also another zone in our discount. So now discount, we have this zone. Okay, so if you're kind of a risk taker, you can say, okay, what I'm going to do is I'm going to take 2 trades. First trade, if this one fails, then I'm going to take a trade at my extreme zone, that leg. So let's say this one works, right? The first take profit that you can aim for is the previous high. You can aim for this high, but also you have to look at the daily structure, because now daily we are bullish. Remember, daily we just broke structure to the upside and price is coming back to this daily structure, daily demand. So you take a trade right there. Where will be your take profit? It will be your daily structure right there, right? It will be your daily structure. And that's how the market is going to push, and it will give you nice 1 to 15. And that's how we take trades, combining the higher time frame structure, lower time frame structure, looking at higher time frame demand and supply zones, and then we look for entries on lower time frames. Okay, so that's how we do it, and that's how it goes. All right. Let me we are going to still continue on this one because I can see need to time, it's getting late here, so I need to be preparing myself for bed.
Yeah, I said that it's almost time to go to bed.
Yeah, it's 3 p.m. now here, so it's very late
3?
now. Yeah, I mean it's 11 p.m.
Okay, I thought it was about 10, no? Or 12. I thought it was about 10 p.m. No?
No, it's 11 p.m.
Oh, 11, yeah.
Yeah, it's 11 p.m. Okay. So we're going to continue from here, and then we'll look at some lower time frame entries. We'll finish off first with our H4, because again we can do the H4 and see how it goes. It's the same thing. It's the same thing like what we have done on our daily, right? Like what we have done on daily. So we'll keep on refining because we started on the higher time frame and now we went on the lower time frame. So the reason why, like I said at times, at first I said this may not make so much sense because it may look like we are just, scribbling here. You may be asking yourself questions, but how do I use this information? How do I apply this information? All right. So what you can begin to see is that this information now, all right, is beginning to make sense because the moment you start looking at supply and demand and putting supply and demand together with market structure, then you begin to see that, okay, there will be areas of entries which I can now begin to think of how important market structure is and being able to identify the right zone for me to trade from. All right, so it helps you now to look at, okay, so this is where I'll be looking at to take in trade. So these zones are areas where we'll be looking to take entries, these things that we are marking. This is where we'll be looking forward to take entries, all right? So these are areas where now, that's where entries will be made. Okay, so for example, let's just do a quick 4-hour markup if I will manage. So again, we can see we had a break of structure right here. Okay, so 4 hours now we are bullish, right? So here we can say from that high, from that low to that high, all right, and we can identify our zone, all right? So sometimes if you have this big zone like this and it left a week down, just go for a week like that and yeah, put it like that. So we have this area, right, as our 4-hour zone, and also we had also this area as our 4-hour zone. So you can see one of the demand failed, but one worked. So let's say if you took 2 trades, one will be a loss and the other one will be a win. So let's say you lost a trade on this one. Okay, that is if you're a risk entry, you just took a risk entry, you lost on this one, but if you took another one here, this would have been a nice trade to take because look, it came here because I said this should not be broken because the moment price breaks it, then we are downtrend. All right, so this would have worked. So this is a good take profit trade which worked, and yeah. That's how you start thinking now of entries. All right, that's how you start thinking now of entries. Okay, so again, we break structure to the upside on 4 hours. We get our gun box from this low to that high. Again, we'll be looking for some zones. So the last one will be this one. So this higher time frame zone. So we refine it. So the daily now is refined on 4 hours. All right. So again, price never came back to this 4 hour, to this zone. And then what happened? We can see that right here, it's not a nice one, but I don't like these wicks because they're not so much big, right? They're not so much big, but you can see we had a small pause in price, and price, of course, still never came back to this area. So it's not even that much significant, but we can see that we had that kind of a pause in the market. Price pushed, paused, then pushed, made this pause. Now, this is a demand zone that we could have gone for, but it's on the wrong side. It's on our premium. So we don't pick anything on our premium. You can see this is a zone that we could have gone for, but much of it is on our premium, and this is why it never even worked. All right, so don't have to look at it or consider it anymore. So at least we can consider this to be one of those, but again, it's one of those zones that just was not so clear. Then we come to another break of structure from that high. We break structure right here, and after we break structure, then we get our gun box, put it right there. And then from here, we identify this zone is going to be quite huge because of the candlestick. So we have this zone right here, and you can see that this zone held. Okay, at least it held. There was this one, which was a daily. Which one was a daily? This one. Okay, just a moment. Let me fix something. This one was supposed to be 4 hours, and this one is supposed to be a daily. Right. So price then pulls back, fails to come back into this area. Something, such things will happen in the market. So, but we can see that we had this week right here in this candle. And you can see this is where price decided to rest. Right. So we had a nice one right here. Price came back here, then pushed to the upside. And then after price pushed to the upside, we had a break of structure again to the upside 4 hours. Again, we now look to the daily. So daily price comes to our zone, which is very, 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 odd zone, which you can also refine on 4 hours. You can say 4 hours. You can even refine it to that area, right? So it can be refined on 4 hours, and you can see price came back to that odd zone. But what we expect to see from this zone is just a reaction. So sometimes a reaction can be deep, because we can see that this reaction lasted for many, many, many days. All right. But what we are looking forward to is taking a buy from here, because the trend is bullish. So what do we have in this zone? We have this zone right here. And of course, price reacted on these zones, tried to push up until they were taken out. And also the extreme, which is this one. And we could see that this one tried to hold, right? Because we can see how price really, really tried to push up, and then, yeah, they took it out as well. But again, as they took it out, you can see that price came back to this other one, and then from there, that's where we had our buys. All right, that's where we had our buys. Okay, so after that, we have now this break of structure, which we can call our 4-hour break of structure. And then after we have that 4-hour break of structure, we can say we needed to see price pull back. So our low on 4 hours will be this one. Our high on 4 hours will be that one. Sometimes things may get a little bit complicated and complex. Yeah, but in the end, if that's what we have, that's what we have to work with. So again, 4 hours structure, demand. We have so many zones in this leg. We also have this one, and all these zones have not been retested yet. We don't know whether price will come back to them, but we can just hope that price comes back to them. And these will be areas of reactions, and reactions in Nasdaq could be quite huge. It can even give you so much, just a reaction. But knowing the trend very well will prevent you from taking a wrong trade that could lead you into losses. So these are the only zones that we have in this 4-hour structure. Then we pass, we then move to the next one. So we pull back, then we break structure to the upside. Again, though it was our daily structure, we can still refer to it on 4 hours as a 4-hour what? As a 4-hour structure. So again, right here, what do we have? We have this low and that high as our range. All right, so again, in this situation, you can see that price came to this big daily structure, big daily zone, but on 4 hours, price actually never even came to a 4-hour zone, because the 4-hour zone was this one, which price never came back to. And the other zone that price reacted to was, this one here, all right, which is a wick. So again, you can see price came back to this one, and this is where price decided to reverse from. And we can have so many zones down here. Even another one could even be this one right here. And yeah, so you can see we had at least several zones because price was not really pushing. But again, once we start looking at liquidity and inducement, then we're going to, liquidity and imbalance, then we're going to use imbalance to pinpoint clean zones so that we don't have too many zones that we are looking for, but we just have 2 clean zones that we can just be looking for. All right, again, we have that break of structure to the upside. Then right here, we have that push to the upside. And again, what do we have here? All right, so at the bottom, we have this zone, right, on 4 hours. Again, price never put back to this area. So we just have to leave them because we don't know when price is going to come back. And again, here, price, there wasn't any clean zone. So we can just say price reacted. Oh, okay. So this was one move from this low to that high, one move. So price came back and it reacted somewhere. Maybe lower time frame like H1 could give us the reason why price did this. All right. But 4 hours never had anything. And what happened? We push. We push in, break structure. Then after we break structure, price pushes all the way to the upside. So this one is one of those moves that was quite huge, but we managed to come back to our discounted areas. And again, this is one of those trades where you wouldn't get anything out because price never came back to any zone in our discount. All right, price never came back to any zone in our discount. So we had this zone, we also had that zone right there, and none of them got tapped. So we can just move on, meaning that unless we bring in other aspect of liquidity, that's when we are going to be able to catch a trade like this one. Now, again, right here, what happens, you can see we break structure. And of course, this one, it's also clear that price never got back, right? If we are looking at the 4 hours, if we repeat the same method over and over, you will observe that price never got to come back. So again, we only have, it will be the same thing since it's the same move that we had on daily, except that this time around our 4 hour zone is going to be very small. It will be somewhere here. And the next one that we're going to look at is could be here. Also look at this one here. So these are zones that we can identify in our 4 hour time frame. And then also which one, maybe also this one right here. So all these zones are zones that are found in our premium discount zone. So these are the most important zones that we are most interested in, and that's all. Okay, so the next is, again, price never put back. So the next thing that we see is price break structure. And then after we break structure right here, we can get our gun box and then find that high. Again, here we only had one zone, which is this extreme, and this is where price came back to. So let's say this one, it was one of those nice buys that you could be looking forward to taking because it went all the way to break structure to the upside. So again, 4 hours, we break structure to the upside. And now from there, this is where we currently are. So from here, we can say we have a push all the way to the upside. All right, and we have created even equal highs, which is good, meaning that these highs are going to be taken out probably tomorrow. Now, let's look at, this is our daily zone that we had identified on daily. So if we look at the 4 hours, we only have this extreme zone right here. Okay, extreme zone right here. And we also have this one right here. It's also below, yeah, it's also below the zone. Oops, not 15. Okay, and then the next one that we're going to have is, we can look at maybe this one. Oops, picked the wrong two. Can look at this one right here. All right, so, and what happened? Price, of course, pulled back, but it pulled into, you know, sometimes what happens, what the market will do, it won't make so much sense. But this is the 4-hour, you know, weeks I was telling you about. So you can see how they held here. Yeah, they held, and this is where price came and found that that support. And from there, you can even, just for the sake of this lesson, maybe we can even go to lower time frame, like 15 minutes. So as price came to this 4-hour structure, this is now how you take a trade. And this is one of those trades that I took, and it really paid so well. So right here, price reacted on this H4 zone. And what I was waiting for is, I saw M15 was downtrend, all right? M15 was downtrend, and we now took out this high. So now that was our change of character on M15. So we have a change of character now. So now, after we have a change of character, what happened? I took my gun box from this low all the way to the high. Okay, and we identified quite a number of zones, right? We had this zone right here. So basically, you can say we had all this zone, which was big. And of course, price came back to this area, right, to this M15 structure. Okay, but then I started looking at some refinements. So you can see that we had, I had to take all this range right here as my entry. So this was another zone that I looked at, and yeah, so it took an entry right here. The moment price put back down, took an entry right here. Took an entry right here. Stop loss was down here, about 17 points. And my take profit for this trade, since I was just targeting internal structure, my take profit was this structure right here. That's where I was targeting. So it was one of those big moves, because it gave 240 points in one move. That was one day. And you can see how high that trade went. So if I was to target, I would have even targeted this high, right? If I was to take that nice trade, I would have even targeted that high, and it would have given 1 to 32, right? So maybe, yep, 1 to 32. Okay, so 1 to 32 points, somewhere there. Yeah, look at how big. So taking a 15-minute trade based on 4-hour structure. So 4-hour, it's like this, right? So entering, let me do this. M15. Okay, yeah. So that was one of a big move, right? Big move. Big move. All right. Okay, so this is how now you begin to look at entries, combining now supply and demand. Once price hits that zone, then you go on the lower time frame, then you look for confirmation on that area for your entries. Any questions? I think we can end here for today.
Yeah. For this, I think when you start working on the entry, and I think it will be when you start showing the entry, like you show, like when you you start the next session for the entry, I will be, it will be clear for me.
All right.
But I
Okay, yeah,
understand. I understand
yeah,
the concept.
it'll be clear. It'll be clear.
Clearer.
Like, yeah, it'll be more clearer. But what I can still advise, I know you work, you're very busy man. Yeah, but all I can advise is work to understand this. You know, it may look like it's a very big thing, and I know it's a very big thing, because just getting the right concept, the right ideology, and the right understanding of the market, it will really take you a lot of time. But then if you put in work to read, okay, work, like you practice this concept, you learn, you practice, you learn, you practice, you learn, you practice, you find that it will take you a shorter period of time to understand the concept and be able to apply it on the live market and see it yield results for you. Okay, so my only encouragement that I can give you is it may look like it's a big thing, but it's very small if you just understand market structure. That's why we took so much time looking at market structure. Understand market structure very well. Then these things of supply and demand is just you putting a gun box, and then you identify the zones. If it is a buy setup, if it's in an uptrend, you keep on identifying zones that are found in the discount. That's all. If it is a sell trend or a bearish trend, you keep on identifying zones that are in a premium zone. That's all. And you wait for price to get there. Once price gets to that zone, you go on the lower time frame. You look for change of character, meaning that if M15 was uptrend, you wait for it to become downtrend, and you start taking the trades. It's as simple as that.
Yeah.
All right. Go through this work, and I'll see you in the next session.
Yeah, okay.
Okay, thank you. Have a blessed
Okay,
afternoon.
welcome. So have a good night then.
All right, thank you. Bye.
Okay, bye.